Back with Bobby and JJ Radio. Today's show is entitled Housing Trends, and we have one of our, well, this is a really big show for me because I love Bob Gardner. He's our guest speaker. I've been listening to Bob Gardner the 11 years that I've been in the real estate industry. I've actually made investments because of Bob Gardner because he told me.
So did I.
Yeah, because he told me where to invest, or what he does is he's one of the biggest analysts of the market and has been. He's been a mortgage banker for 45 years. He actually started one of the most profound and most influential mortgage companies here in the San Antonio metro area, Legacy Mutual Mortgage. He's a graduate from Trinity University. He's married. He has 3 grandchildren, and he's pretty much the San Antonioan now. But how you doing today, Bob? Thank you so much for joining us today.
Thank you for having me.
Absolutely.
It's a great day.
Yes, sir. So, Bob, what is going on with the housing affordability here in San Antonio metro?
Well, that's been, one of the big changes in San Antonio. We've for years have prided ourselves in the fact that we're a very affordable city, and it's really helped us attract corporations to move here.
Sure.
And it's becoming more and more apparent that affordability is an issue. And if you look today at the houses that are for sale below $200,000, I'm talking about the houses on the resale side.
Right.
That has now declined from being at almost 70% of our housing stock down to about 57% of the housing stock, and that's happened just in the last few years.
Sure.
And one of the biggest changes is on the new home side, though, because of the increase in value of land and the growth in San Antonio, which is all positive. But what gets left behind is that we don't have the ability to purchase and develop lots where we can build houses below $150,000.
Right.
And that part of the market, and as a matter of fact, according to the Metro study, the market, we started about in 2014 about 8,000 to 9,000 houses last year, but houses that were started below 150,000 only was 430 houses below $150,000.
Wow.
So that's about 5% of the housing. And we probably just a few years ago used to start 25 and 30% of our housing was below 150,000.
Right.
That's really made a big difference, and it'll make a difference in the future. It'll be very difficult to see year-over-year changes in the number of house sales if we don't figure out how to build some affordable housing, because what happens is there's a big demand for those houses, but they're not available.
Right.
If you look at MLS, houses priced below $200,000 only amount to about actually about a 2-month supply.
Right.
Now overall, we've got a little less than a 5-month supply, but under 200,000, it's at best a 2-month supply.
So for our listeners out there, what you mean by 2-month supply is you're saying that the inventory is so low that these houses are turning over in 60 days.
Well, not only that, but frankly, if it's a pretty good house below $200,000, then you'll have multiple offers on that house.
Right.
So we normally sit at a. What is the norm then? If we're sitting at 2 months supply now, what do we normally sit at?
Well, the normal would be, probably to have an equilibrium in inventory would be closer to a 6 or 6.5 months supply.
So we're way low on that lower. And I see it too, because we go out there and sometimes we do have clients in that price range, and we're seeing a lot of multiple offers, houses selling in the first week. There's just not a lot of inventory in that price range.
It's a fun time to be a listing agent under $200,000, and it's a nightmare to be a buyer's agent under $200,000. Bobby and I do. I mean, it's not our bread and butter, but it's a good amount of our business. So I went to your property forecast this year, and my heart sank because you said 57% of all sales were $200,000 or less, and I was like, that's great because half of the business that's my bread and butter. And then you said you're assuming it's going to be about a third this coming year. Just
it's
for
going to
different
continue
factors.
to drop.
Sure.
And what we're starting to see in the under 200,000, one of the things that was sort of I didn't think it was a positive trend is even though the under $200,000 market had a shrinking amount of inventory, I wasn't seeing that the prices were rising. You would normally see, if you have a scarcity of product, you normally see the price rise pretty
Right.
fast. But I think there's just a finite amount of people who can start to afford the product after a while.
Sure.
So one of the things that we see in the San Antonio area, it's very apparent to you when you drive around, is the number of apartment projects that are being built.
Right.
And so a lot of people, in order to find basic housing, are moving into apartments. And the apartment market is 92% occupied, and the average rents today are up to $1 a foot. That's just the average.
Wow. Yeah.
Yeah, I've noticed in the past few years that it's gotten really expensive to rent.
Mm-hmm.
It's way more expensive than it's been in the past.
Yeah,
5,
Bobby
6
and I
years.
are landlords, so it's it's a good time to be a landlord, bad time to be a tenant. But you're starting to see that kind of increase on one side or the other. If you're just joining us, we're speaking with Bob Gardner. He is breaking down everything as far as the housing trends for this past year and projections of what this coming 2015 may or may not be. Bob, what is the price range you see, or what do you see as far as the $200,000 to $500,000 market? What's happening there?
Well, what's happened is that the growing part of our market is the $200,000 to $500,000 market, whether you're talking about resales or you're talking about new home construction. This is where the market's been the strongest. This part of the market was up in terms of number of sales. This part of the market was up 14% over in 2014 versus 2013. And now the new homes in this price range, they represent, this part of the market represents 43% of all new home sales, and it represents 57% of new home sales,
Right.
and it represents 39% of the resales. And this part of the $200,000 to $500,000 market used to be, it was about 25% of our market. Now it's all the way up to 39%. A lot of this has to do with jobs. A lot of this has to do with historically low interest rates. If I go back all the way to 1980, I cannot find a period of time, and this is a prolonged period of time when we've had interest rates this low.
Right. And so do you think because the interest rates are so low that it's, is it drive, because back to the under $200,000 market that you're talking about, as you just mentioned, it's not like the houses went up 20% in value, right? It was just less of them, right? It's just a scarcity, not really a huge drive in, or jump in appraisal. And I think that's a big thing that we're seeing too, is we still have appraisal issues. Bob and I do a good book of business, and the VA and the conventional FHA appraisers, they still a little trigger shy to give too much value to a house under $200,000, but there's just less of them. And that, as you said, had to do with a lot of the land being too expensive to build. So builders are forcing themselves. With the land values being what they are, and the labor. Isn't the labor a big thing too? Because I know that the Eagle Ford shell is a good thing, but they're taking a lot of the labor away from some of these builders here.
Evidently, I don't know that I'm an expert on the labor side of it. When I talk to home builders, they talk about the fact that it is more difficult to fill the positions.
Sure.
It's slower to get some of the new homes built.
Right.
But I don't know that I'm an absolute expert in that
absolutely.
area.
So
Yeah.
Bob, normally when something is there's less of something available, it drives the prices up. You also said that the prices haven't gone up in that price range. That doesn't make sense to me, how there's hardly any of it, but the prices aren't going up. How do you explain that?
I was a little confused by that last year too, because with the price of homes below $200,000 on the resale side, I would have thought with scarcity of that product, I would have thought we'd had a much faster movement upward in price. And it wasn't until I started taking a look at the numbers in 2014, when I look back at last year, that I finally started to see some real price movement in the under $200,000 market. And I think the reason that it took a while was the fact that a lot of people, regardless of how strong our job formations have been, a lot of people could only afford to pay so much, no matter how low interest rates were.
Sure.
There's still a certain amount of credit issues that consumers have that they haven't been able to overcome.
Sure.
And then wages haven't kept pace in around the country, for that matter. Wages at certain levels haven't kept pace with the overall wage appreciation. So I think it was affecting that under $200,000 market, but it's getting better now.
Yeah, so you say, so that's kind of creating a ceiling there almost, where there's people that want to buy, but the amount that they can buy is obviously dictated by their debt to income ratios and the interest rates that have been holding strong low, and what their actual, what they make per for a living, and that's kind of just holding them. It's not like they can just decide, okay, there's nothing left at 190, let's just go to 230.
Yeah. They're just, it's just taken a while for that to respond. It looks better in 2014 than it did.
Sure. And so, is there any other reason you think that the $200,000 to $500,000 is going to be the sweet spot for San Antonio? Do you have anything else that we haven't talked about yet? Do you think that's going to really bloom that pocket there?
Well, in a few minutes, we're going to talk about jobs, because I think that it's the sweet spot, because we're seeing some real job growth in the professional sector, business and professional sector, that's really helped that out a lot. Plus, you've got the equity markets that have done well, so people have felt better about their balance sheet.
Sure.
And and when people feel better about their balance sheet, they tend to want to move up. Plus, the house they currently own, it's good for the move-up market. That up to $500,000 is a good move-up market, and
sure.
So all of a sudden they got the ability to sell their existing house, which they do. They take their equity and move up, and it's a combination of those things that really made a difference in the market.
Absolutely. They can call us whenever to do that, because we'll be available for them for sure. So if you can just stick with us for a little bit, we'll be right back with Bob Gardner. We're going to speak more about the market trends that are happening right now. This is very important information for anyone in the San Antonio, Bexar County metro area. We will be right back after a quick note from our sponsors. Do not move an inch. Do not touch your dial. This is Bobby and JJ Radio.